Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro do a little bit better after some Italian news, and we'll get to that in a few moments. Let's move this out of the way. Also seeing gold fare a little bit better, working a bit higher. Same thing here with the dollar paring back. Pretty key area here in the dollar, just above this 97 area. So we are edging back from this area. And dollar CAD just hanging around. Did slip back below that 32.45, but right now that key level is 54. And we are seeing, if you look on the dollar yen, got a little bit of a gravestone doji here on the 2-hour chart here. Cable's also moved a little bit higher from its lows. And we're going to pull in some news here. And I'm just going to get ready to show the Asian analysis. Before we get to the news, we're just going to quickly take a look on the euro. So it's a daily close for the euro, daily close support for the euro. Certainly we're pulling away from that though. Is the 1308 on a close. 2-hour support comes in at 1313. That actually had to be the 61%. So certainly an area of where you know where the risk level is on that. But the market needs a 2-hour close above 1372. Well, we weren't able to do that here. You can see that to stymie the downside momentum. A 2-hour close above 1420 would change the outlook on the euro to bullish. Well, you can see here on the euro, we came up short of that 1372 on this 2-hour close here. There it is right there. It actually just came in right there and we're kind of easing back. That would help stymie the downside momentum here. So we did get some good news out of Italy. So support right now on the short-term plane would come in right there around 1342. So you pretty much know where we risk if we're going to be able to go and hold from here on the euro. And certainly finally we're starting to see the cable pick up just a little bit, but it's on one heck of a downside momentum here with the cable. And we'll take a look here on the daily. And we're indicating here a daily close below this 27.73. Now that's that key area. If we were to break below that, so far we're holding up okay. We'd target the 25.64 with 25.12 being the 78% of the entire move of 1892 to 43.75. Now the market needs a daily close above 30.27 to stop the bleeding for now. So we would really have to move back up above this 30.27. So we've got this good downside momentum, and certainly looks a whole heck of a lot worse on the 2-hour chart. But as I said, we're going to have to get above 30.27 on a daily close just to stop this downside momentum here in the cable. And just giving an overview of where we stand as we come into the week. And take a look at the dollar CAD. Well, certainly that's been impacted by the continued downside move here that we're seeing here with the crude oil. And I mean, it's just been absolutely relentless. I thought we would have been able to, once we got down here, the 160, I think it was the 161%, I believe it was the time, looked like we'd be able to go on and gather ourselves and move back up. We were looking for over the course of 10 days or so, and I think that's after we got down here. And we did see a move back up, but we've turned around and fallen back down. Boy, down we have stayed here in the crude oil, and that's controlling the dollar CAD. Let's put on crude oil controls the dice with the CAD. A 2-hour close above 32.54 allows for a challenge of the recent high. 2 consecutive 2-hour close below 31.64 would target 30.11. So we're looking here. We had gotten above that 32.45. Remember getting short and had some opportunities to go in and get out of this thing, for 35, I think even 45 pip gains, and but then we turned around, we took off, got back above the 32.45, and this thing really shot up. We've come back down. You can see 32.54 is going to be the risk point on the 2-hour chart. Actually, you would think that the dollar CAD would still be stronger, probably around this 32.60 area. We probably should be about about at least 55 pips higher if you look where crude oil is, if not even higher than that, pushing here. So it's still, I think what we did was we did stop out a lot of people, myself included, on the way up, and then we paired back, and now it's having a hard time to get back. So it looks like this 32.54. Remember, it was 32.45 before here. Right in there is now going to be the risk level now, 32.54 here. But I would think the dollar CAD, you would think it'd be much higher if you take a look as to where crude oil is. Now, like I said, there's still a lot of other issues for dollar CAD, but for it to be not as strong in light of crude, possibly trying to make another trek for new low, you would think that this would be a lot higher. So once again, we'll see how this goes and plays out, but certainly look like it would have a tough time to get above 32.54. That'll be the key level. If they can get a 2-hour close above that, that would open the door for us to challenge these highs. And on to the dollar yen. It says the daily chart requires a close above 13.21 to open for a test of 114. 2-hour needs a closing bar above 13.09 to set up a run to 13.69. Support comes in at 12.60. A 2-hour close below this level would target 11.95. So moving on here to the dollar yen. There's a 13.09, so we certainly did go in and jump above this 13.09. We've got a solid close above that. It really opens the door for us to push up in here. Now the daily is a little bit different here. We'll move into that. If we can get above this area here, we can certainly get going here and actually try and push back. Here's that little area right in here. If we can get above this 13.21 on a daily close, it opens the door for them to go back to challenge up in here. But we'll see how the day is still early. There was some news about Kuroda, but trying to think they can go in and even out the balance sheet without too many woes. We'll see how that plays out. But on a short-term basis, now we were able to get this 2-hour close above 13.09. That's key. A little bit of a graystone doji, a little bit of weakness ahead, this 13.40. But right now, we've certainly turned things around here, and really you would be looking for the market to defend these dips down here up to 13.02. So we'll see how, if maybe we just ease back, the key will be, and maybe you ease back 50% of this bar right here, which would take us right down around that 13.02-ish area right there, about 13.05 or 6. But we would need to defend this area on the way back, 13.02. Not that far away from it here on the dollar yen. Moving on to the cash dollar index, since the daily dollar index body has engulfed the prior 2 session bodies, and the key level ahead for the daily close is 97.13. Now, we did get above here, but we did back away, but that'd be on a close. You can see right here. Right here in the 2-hour, got it up to about 97.04. 97.13 would be the key on this on the daily We're trying to ease back just a bit, but you can see here this 96.84. It's kind of interesting that, I mean, we're able to recapture or regain this 96.84, although it was holiday trading, easier to go with what's been the trend, which is to go with the dollar, and certainly with the Italian news, there wasn't any reason to turn away buying the euro, and the euro was certainly under pressure on Friday. But like I said, for us, this is going to be the risk area right now, 96.84. You can see how key this level is. So we got above it in holiday trading. We've lost it, and you see they tried to make a run back to this 84, and this will be key. In order for the dollar to move back higher again or try and get this up, reestablish this upside momentum, we'd need to get a 2-hour close above this 96.84. And with gold, gold's still above the breakout level of 1219, but the 2-hour exponential moving averages have moved into a sell mode after generating a buy since November the 14th. This ain't been on buy mode with the exponential moving averages. We kind of dipped. We're going to see how this plays out, because one thing you have to factor in also is, once again, holiday mode. But the upside target remains for 1237. So we'll see how this plays out. Certainly with the dollar weakening, this would go on and open the door for us to move higher. See. So you can see right here, when we just switched into a buy mode, there's been a buy mode and we just dipped, but you have to, with a little bit of a grain of salt, is that it was done in the holiday mode. So they were already pushing the dollar here. Now we're starting to trump back up here. And one of the things that you see with these exponential moving averages is that generally if you get a false move, like if it turns out to be false, it comes back, usually this roots back up here. But once again, it was holiday mode. So what happens is people say, okay, now I'm getting short. And then they end up having to force to buy back. But once again, this whole area where they dip back was holiday mode. So, but it's been in that buy. It was in that buy mode through this entire period here with the exponential moving averages. So let's go on and move into the news. But as I mentioned here, the upside target remains in place, which is this 1237 for now. Okay, Australian and New Zealand dollars find tenuous support ahead of the trade test. The Australian and New Zealand dollars found some support on Monday as Asian markets steadied on hopes for progress on the Sino-US tariffs at an anxiously awaited G20 meeting later in the week. Australian dollar, often used as a liquid proxy for global trade prospects, edged up to 72.42, away from last week's low of 72.02. Remember, that was that 72.40 that we talked about was the first area that they wanted to go and step in and buy it on after we had this pullback. We'd had a pretty good mercurial run over the prior 10 days. The New Zealand dollar retail sales showed no growth at all in real terms in the third quarter, when analysts had looked for a robust rise of 1%. A sharp fall in food and vehicle sales suggested economic growth might also disappoint in the quarter, though the impact might be balanced somewhat by a steep rise in inventories. Still, both currencies remain hostage to a meeting between President Trump and his Chinese counterpart Xi Jinping in Argentina this week to see if the world's biggest economies can de-escalate tensions over trade. Trump has sounded slightly more conciliatory recently, while heavy losses on Wall Street provide a homegrown risk to bolster market risk appetites. It has us all believing that some form of a handshake agreement could be reached, whereby Trump agrees, for now, not to proceed with further tariff action, said NEB's head of FX strategy, Ray a trill. This is not a high conviction call, more like 60-40 added. And even if we're right, we suspect it will do no more than grant a temporary stay of execution to the further trade action. Yet any deal could elicit enough relief to lift the Aussie to 74 cents in the short term, said a trill. The lack of progress would likely be very bearish for currency, particularly as worries over the Chinese economy have taken a heavy toll on iron ore and coal prices in recent days. Futures for iron ore, Australia's single biggest export earner, tumbled nearly 6% on Monday as steel prices dropped to the lowest in almost 5 months. Pound strengthens on EU Brexit deal approval and the UK vote in focus. The pound rose on Monday after the European Union sealed a Brexit deal, but the currency's gains were curbed by doubts about Prime Minister Theresa May's getting the agreement through a divided British Parliament, with European leaders finally endorsing May's plan for future ties between Britain and the bloc. Traders of sterling are focused on a parliamentary vote on the deal likely to take place in mid-December. For now, the odds look stacked against May, with criticism of the agreement proved in Brussels on Sunday from all sides, including from the Northern Irish Party propping her minority government. The failure of the pound to rally on positive developments suggests the market is pricing in that deal won't pass the first time in Parliament, said Lee Hardiman. During the next 2 weeks, the pound will likely trade with increased volatility added. Brexit negotiations and political uncertainty in Britain remain the key drivers in the pound, and many analysts are cautious about its prospects. The pound traded up to 2/10 versus the dollar, 28.33. Position data suggests some hedge funds have started to unwind large short positions on sterling last week as hopes grew the EU would back May's deal. Net short positions on the pound saw the fourth biggest weekly decline in over a year, according to the CFTC data. But growing opposition to May's Brexit agreement has continued to pressure the sterling, pulling it down to 2.5% to a November 7 high of 31.76 from November high, I should say. May will call an emergency cabinet meeting on Monday to brief ministers on her strategy, then begin a 2-week campaign to sell her plan directly to the British electorate. And certainly, like I said, the pound is really under a lot of pressure at this juncture. The point is, and we'll look at again, is on the daily, if it loses that support area here, we could really open the door for us to move to mid 25, 25.50, 25.64. The euro rallies as Italy relief or lifts risk appetite. The euro strengthened against major currencies on Monday, with risk appetite lifted after the European Union and Britain agreed a Brexit deal and signs that Italy is willing to reach a compromise over its 2019 budget plans. Sterling was firmer at around 28.33. A focus turned away from Sunday's pact with EU leaders to a vote on the deal in the British Parliament next month. Europe's single currency gained 0.3 to 113.76 and was up 0.7 at 28.90 yen. Broader optimism over the euro was reflected in the latest weekly positioning data, where long dollar positions have declined slightly. Net weekly positions in the euro rose by biggest weekly margin in more than 2 months. Italy's governing coalition is discussing reducing next year's budget deficit target to as low as 2% of gross domestic product to avoid a disciplinary procedure from Brussels, a government source said on Monday. Abating political risk in Europe could help all European currencies today, said Valentin Marinov, head of FX at Credit Agricole. Recent media reports that the populist government in Italy may be willing to compromise on the budget is one of the potentially positive developments. Marinov added that most major currencies will likely remain on a holding pattern ahead of the key risk events later this week, which include a speech by Federal Chairman Jerome Powell at the G20 meeting. At the G20 meeting in Buenos Aires, President Trump and Chinese President Xi Jinping are expected to discuss contentious trade matters in which would have an impact on currencies such as the Australian dollar and New Zealand dollar that have close ties with China. In another sign of improved risk appetite, the Japanese yen changed hands at 13.25, down by 1/3% against the greenback. Focus was expected to turn later in the session to Germany's IFO Business Sentiment Survey for the latest clues on the state of Europe's biggest economy, as well as appearance by ECB President Draghi at the European Parliament. And on to the Japanese yen. The Kuroda voices confidence that the BOJ can shrink the balance sheet smoothly. Bank of Japan's Governor Haruhiko Kuroda voiced confidence on Thursday that the central bank in China can shrink its balance sheet at an appropriate pace without disrupting markets. He also said the BOJ's huge bond buying was aimed at achieving its 2% inflation target, not at the bank rolling the government's public debt. How to deal with the BOJ's expanded balance sheet would be among the key challenges for us when we were to exit from quantitative easing, Kuroda told Parliament. But past experience of other central banks indicate with a good mix of redemption and reinvestment, it's possible to shrink our balance sheet in an appropriate pace while keeping markets stable, he said. The BOJ has become among the first G7 nations to own assets collectively more than the country's entire economy, following half a decade of a spending spree to accelerate weak price growth. And that's been a big concern. And, about 3 or 4 years ago, there was even thoughts that the dollar yen might even appreciate to 150, if not even higher, because of, this whole balance sheet issue. But things quieted down, and we saw the dollar yen pull back down into the 105, 104 area here. Then we pop back again. But they've been able to keep this thing under pretty good wraps so far. And the Italian bond yields fall as the government looks to cave on the budget revision. Obviously, this is key for the euro. Now we're starting to see the euro, like I said, dip back a bit. We talked about the key importance of that 1372, which they got above just a little bit, but they're paring back. Does say the Italian government bond yields fell by over 30 basis points to reach over 2-month lows in early trade on Monday, after reports that Italy's governing coalition is bowing to pressure and planning to reduce next year's budget deficit target. Italy's considered reducing it by to as low as 2%. Helps of an agreement pushed Italy's 10-year government bond yield down by over 22 basis points. The spread over Germany fell below 300 basis points. Rate strategist said the government's change of direction was somewhat surprising. I don't understand why the Italian government is giving in now, given that the spread reactions were rather muted after unchanged budget. But an analyst said the pressure to revise the budget came from the lackluster BTP Italia bond sale last week, which suggested domestic investors are losing faith in Italian assets. The Bank of Italy last week warned that rising yields on Italian government bonds are hurting private wealth. The Italian government should take notice of several tough messages they received this past week, particularly from Italian public and Banca d'Italia, Eric Nielsen, group economists said. President of the EU Commission, Jean-Claude Juncker, on Saturday met with Italian Prime Minister Giuseppe Conte to discuss the budget. So as it appears, it looks like they're getting, concerns that these concerns aren't necessarily coming from outside, but coming from internally. And I think that's, as the gentleman was saying, that's why you're starting to see them give in. One guy's saying, hey, they shouldn't have to. The spread of the German yields isn't that bad, but we're starting to see concerns from internally, from inside Italy. And lastly, in gold gains on concerns over growth and focus on the Fed. Gold rose on Mondays as fear of a slowdown in global economic growth and uncertainty around the U.S. interest rate trajectory bolstered the metal ahead of the G20 meeting. President Trump and Chinese President Xi Jinping are expected to meet on the sidelines at the G20, and we're starting to see gold just ease back a bit. Growing unease regarding the G20 summit and the possibility of a deal has seen gold prices hold up relatively well. However, analysts said the gold's direction in the near term will largely be dictated by the dollar's movement, which has significantly dented bullion's appeal as a safe haven during political and economic uncertainty. And we'll move on to the bias chart. Okay, let's go and move into the euro now. We did get this little pop-up here on the Italian news, and them starting to look at holding that debt level at 2% versus what they were talking about, 2.5, 2.6. And that's provided a little bit of a relief rally, but certainly the risk level comes in at this 13.13. You can see right here. And this also coincides right here with the key level here. The 13, 13, 13, and 13, 13 happens to be the 61% of this full retracement back. On a very short-term basis, we'd be looking right there, 1343 on a short-term basis. So if you're looking to buy this thing, you'd be looking right there, 1343. But beware that the risk level is down here at 1313 right now. Like I said, on a short-term basis, you're looking right here, right there at 1343. And what you might see is the market may slide back towards there, and it may try and make a move higher. But if we break, and I'm not so sure that the news out of Italy is going to come out so bad now that they're starting to get some concerns internally that people are losing faith in Italian assets. And they don't mean, outside the country, but internally. And I don't think that Italy wants to go through that. So probably, like I said, the risk to make a new low has probably been a bit diminished since this morning. When I say new lows, I mean a move down here, this 1313 area here that we just come right out. So I'll tell you what, for now, we'll go right there with the support coming in at 13. We'll call it 1342. Well, there we are, 43. So we'll just keep that right there. Upside resistance. Well, we know that we need to get a 2-hour close above this 1372. They just edged here. It's right here. Well, they took it out by a pip and a half. Well, actually 2.5 pips, 74.5. That's just to stop what we call stop this bleeding from down here. But we saw a pretty strong force down here. Look at that. Back to back, strong pullback. So the key resistance on a short-term basis is going to be right there. You see here? Right there. 96.5. Let's just call it right there. 1397. That's going to be the initial resistance right now. Right there. 1396.5. We'll call it 1397. Well, you wouldn't necessarily call this bullish, but I don't want to go as far as saying bearish unless we come back down here. So we're going to call it neutral because if you put this in context, you see this big one. We're basically back in our neutral zone. So we'll see how the next couple of days pans itself out. And let's move on to the cable. Well, the concerns with the cable really more, I mean, this huge momentum lower, if you see it on a 2-hour chart, it's more pronounced. But the key area is going to be right here. It's a daily close right there. We lose that there, 27.74. It's going to be heck to pay and really open the door for them to move much lower, and that much lower could have us go down to 25.64. So it's going to be, I think in the meantime, I don't think there's as much here. You can point to this area and this area, but to me, it's all about that 27.74 on a daily. That's going to be the key if we lose that on a daily. And let's go and take a look as far as on the upside. You're really stuck in here, and I think that, to me, I believe that this pound just remains. I'm not going to trade it myself. It's just, but It's under a heck of a lot of pressure. I'm just going to go right here with the levels, which is this 29.37. I think it's just going to have a tough time. It's easier to be a seller of this market. Gun to head, I'd rather be a seller than a buyer here in the cable. So it's going to be 29.37, allowing for some extra room. I mean, there's some resistance right here, right there at 28.89, which isn't even that far away. Good 40 pips. But you can gun this with some stops. But where the rubber meets the road is going to be 29.37, and I think you have to give it that room. I think it's important not only to give it that room because of the volatility we've seen, but I think it's also important because if you have the resistance here, and I think there'll be some on there, I think a 2-hour close above that, people think, okay, now we're bullish. And as I mentioned, on a short-term basis, you'll have taken out some good resistance here. But once again, I don't think it turns anything. I think this 29.37, a 2-hour close above that, it doesn't turn it bullish, but it stops the bleeding on a very short-term basis. That's all it does. So my concern is you put the resistance here and people think, oh, okay, well, we cleared 28.89, blue skies ahead, we've taken out this area, but you could come up here and just easily just run out of gas and fail, and before you know it, we're right back down. So this is where the road meets the road, and really it doesn't turn it any special way. All it does is negate or stymie the downside momentum temporarily right here. That's what it does on the short-term basis. We'll move into the Aussie dollar. We've had a heck of a run when we made up here the 73.40, and we talked about a buying area here, or the 72.40 right there. This would be the starting area here. We took a dip down here towards 72. I think it got as low as 01 or 02. We popped back up all the way to 80, remember? And we've come back down. We talked about that being the initial area to start to accumulate, which is the 72.40 after we saw that area come back down. And you can see here they've defended it. They're back above the 72.40 again. Support now on a short-term basis is going to be right there. Pretty clear, 72.26. And we can move this out of the way. And that's just on a short-term basis. So it's going to be 72.26. And right there. I think that's pretty clear because if they do make that run, you're going to probably see some decent selling right there. 72.95. And the reason I think you'll see some decent selling there, and it has turned bullish, is that as we get above the, get into that G20 meeting with Xi Jinping and Trump, is, you know, you're going to have to still factor in what if Trump just turns around and says, I'm not going to do anything. And then you could open the door for them to move lower. And actually, the risk, although I don't think it's going to play out that way, but the risk is very high because if that happens, then it looks like, you know, they're thinking he's going to give them a handshake agreement, which that could be. And it says his tone has been more conciliatory. But if they can't even do that in that environment, then it would bode for even harsher trade tariffs and really open the door for us to come all the way back down. So once again, any moves to 72.95, that area here, I think you'll see people, not necessarily shorting, but I think that you probably have some shorting, but I think you would see some people willing to jump out and say, I'll reestablish, you know, at a better price. And we'll see what happens afterwards. Let's go and move into the Kiwi. Well, the resistance, I don't think anything's changed. This is it. That's at 68.45. We've talked about that zone here. And I think even if we get good news, we could pop above that, but it's a 2-hour close above that that's going to make all the difference. So it's going to be 68.45. That's going to still remain. Support on the downside. Well, you can see that's held up very well. 67.58, just going with the levels. So I don't see any reason to change that. So right here, and that's bullish right now. We'll move into the dollar CAD. I'm surprised the dollar CAD isn't even higher when you think about, look at this relentless fall in crude oil. Just unbelievable. Look at that. From $77. Wow, that's $27. That is just a huge, huge move. Now, like I said, I think this move was about, when crude oil, I won't say but yeah, it did establish or reestablish itself for this downside momentum. This instead of, which I thought, once we got down here, okay, we'll even up a little bit and then we can move up to about, and I think I was looking right here in this area right here, 59.36 ish. So yeah, right there. Okay, and this had actually ended up being like 161%. I think it was at 55.25. It overshot it just a little bit, and we were talking at the time of the December crude, and we saw the market stabilize from there. We saw it rally. I'm thinking, okay, over the next 10 days, we'll probably make. Well, we did come up. It looks like we came about $1.18 short of what I thought we'd be able to make it to. Certainly was a lot better coming off of these lows. It did come off these lows about $3, which was pretty good. But I thought we might be able to make it up here. But this drop here and then this waterfall, wow, that got things going here in the dollar CAD. So anybody was short, myself included, they got ripped up in here as we took off here. And actually, it's interesting to see that right here, you see what happened here? And I had mine, and actually it hadn't taken me out because I put 32.45 on a 2-hour close. You see this market rip all the way up to 72 and then come back down. Look like, okay, weathered the storm. But I'll be doggone if we just don't start marching back up again. So this was all about that next leg. But that being said, you'd have thought that we probably would have made it closer to about 33.50, if not 34. And since then, what has crude done? Well, crude has continued to stay weak. But look at the dollar CAD. It's pared back. And the whole thing was, I was thinking, is that one of the things that they were talking about the dollar CAD was they thought that we would start to even up, as far as the Bank of Canada would kind of play catch up to the Fed on these. Try to move this a little bit. We can. There we go. So we're starting to see this, pare back, and here you can see this sliding back, despite crude right here continue to move lower and stay lower. So at this point now, 32.54 is the line in the sand, which was, remember, before we had that 32.45. So we're having a tough time. Really, my market is open to working lower, okay? So if we're going to look to reestablish shorts again, the key level would be any moves back towards this 32.54 going to be fought. Probably the resistance right now is going to come in around 32.28 with the risk level up to 54. But that's if you're looking to, get short, it's going to be 32.29. That's your area right here where the market's going to have some tough time here. 32.29. 32.54 would turn things back to bullish, open the door for them to go higher. So we'll go with 32.29 on a short-term basis. It's still bullish, though. Obviously, keep an eye on this crude. If we start to get moving here in crude, that'll open the door for this dollar CAD to move lower. Support on a short-term basis. Would be 31.63 on a very short-term basis, because we've already had a pretty good pullback here. I'll go back in here. And we'd said 2 consecutive 2-hour close below 31.64, okay, and there's that 31.63, would target 30.11 with a pause at 31.13. So keep an eye on this. We've got our support here at 31.63, but 2 consecutive 2-hour closes below that would open the door for us to go much lower with the we'd be looking initially for the 50 pips even lower right from there, right from the get-go, with a potential move down of another 150 almost here, or 130 pips lower. Let's go on and move in now to the dollar Swissy. Resistance pretty clear here. We've got this 99.87, but the market's pretty well oversold, so we have an opportunity to get a little bit higher. We'll give it some room, which is going to be right there at par 05. Par 05. And support comes in right there. 99.37 for right now on a short-term basis. 99.37. And let's go on and move in now to the dollar yen. We got above that 1309 that we talked about. So this mark's really opening up to go a little bit higher, probably a lot more than a little bit higher. And the resistance, the key area is going to be here, right here at 1369. That's where, I mean, we have some resistance here at 40, but really, when you see this strong bar, the market may just kind of gather itself here and just kind of digest some of this gain. But the door is open for them to move so much higher. Probably be a pause around, about 40 pips higher. But the real test is going to come here at 1369. But this 2-hour close above 1309 has opened the market, has opened the pair now to, with the momentum now, to go on and start to move higher here. Support on a very short-term basis, if we were to turn around and fall back, is going to come in here at 1274. 1274. We had a little bit lower because we got it right here at 1263. But if the market starts to slide back, initially we'll find it 74. If we start to pair back, they'll probably test the 93, but initially it'd be right here. You'd see a bounce area here from the 74. Had we not gone past this 1209, the first one's going to be right here at 1262. and they would test it and try and make another run to 93 and then see if we pull back. But right now we've opened the door, so anyone who was short is thinking, wow, I think I'm just going to try and buy back. And so if we were to slide back, it'd come in right there at 1274. And on a short-term basis, it has now we'll just call it in a range. We need to get about a 2-hour close above this 1340 and start to turn this bullish. Obviously, a close above this 2-hour close above 1369 really just opens the door for now to go to new highs. But on a short-term basis, say just in a range for right now, have to do a little bit more work, and so they can hold above the 1309 before we change that. So we'll go to range on the dollar yen. And let's move into the cash dollar index. You can see here that this par one on the Friday, it really did a pretty good job of engulfing these two bars here. It opened the door for this to go higher, but you can see here, this is where it all is set at 97.14, a daily close above that, and we're going to new highs again, or trying to challenge new highs. So this is our risk level for those that are saying, well, I want to be short the dollar index. I think we're going to go on pair back. And that's fine. Just make sure that your risk level has got 97.14 on daily close. You get that 97.14 on daily close, and you don't want to be short at this point, or that'd be prudent not to be short. And sure enough, there's a 14 there. It's actually 15, but right there, that's key. There's some resistance up in here, but it would, if we get above this 14, and really that's right there, it's going to be, and we're starting out the week. We want to see if this market, once again, we're thinking, what if the euro pushes back? And it's going to be that 14 that's going to be key on the daily. But like I said, getting back to the euro, which comprises 56% of the cash dollar index, Italy's starting to relent now. The government is starting to relent, but it has more to do with not from the threats from Brussels, but from the concerns internally from Italy, and the thought that now Italians themselves are starting to lose faith, and you really don't want to go down that slippery road at all. You get going down that road, and boy, things can really unwind very, very fast, and you could end up with a loss of confidence, and you don't even want to go there. So I think that's why they're starting to back off. They've gone from 2.5%, 2.6%. Now they're talking 2%. And we'll see how that plays out. But it may allow this from slipping and testing that 13 area here. And that may keep the dollar index from moving to the, beyond that 97.14 on a daily close. Key support, well, you can see it right here. It's going to come in here at 96.35 right there for key support. Actually move it right. Actually, it's 96.34. Right there. Moving on to gold. Well, we talked about gold here, and the upside target is still in place, 1237. And gold's been really tricky in the sense that every time you think it's about ready to make the move, it doesn't fill the bill, but it has enough to get above. You can see here on the exponential moving averages, we've actually been in a sell mode for quite some time, and we just flipped it to buy, and it kept that momentum. So it goes to that momentum. It just can't fill the bill or seal the deal, so to speak, which is a 1237. Still in place, though, as the upside target. But once again, on a short-term basis, you can see here that we flipped to a sell mode. Now, like I said, part of it was due. We were in the holiday, and it's easier to go along with the dollar. But it's going to be interesting to see how today plays out. You can see this exponential moving average has done very, very well of riding out a level here and staying that way. And then when it does flip, boy, it goes that way for quite a bit of a direction. Okay, and even when you got that dip here, it doesn't get faked out. You see, so this is going to be interesting. I mean, you have to put a little bit of a disclaimer because this happened during the holiday, and it was easier to go with the mode for the dollar, but with the dollar, because certainly the dollar was what was moving hard. The euro, nobody wanted to be long the euro going into the weekend. But like I said, momentum-wise, we've lost some of this here. I was saying here was if we get below 1219, I think we'll make it down to this 1212 here. So short-term basis, got the momentum going against it, and it's going to be key. I'll tell you what, we'll just go with this 1219. On a very ultra short-term basis, you have to say 22, but once again, the momentum has shifted, and you got to be careful with this here. So let's go with 1219. You can see here where the, have some trouble here at this 28 area here. They try to make a run up here, and they kind of start to slide back again. Had it marked as a 130 minutes, actually 120. Oh. There we go. For right now, it's just going to be that 1228 here. So 1228 is the resistance. It's still bullish with an upside target of 1237, but it has on a short-term basis had a little bit of momentum issues. We'll go into the 30-year bond. Really kept the bid here in the bonds with the weakness we've seen here in equities. On a short-term basis, maybe we can get things start to move around again with equities. We'll look at right there. We'll call it 39.19, which isn't that far away. And that might be just a little bit close considering how far with the run that we've had in equities. Resistance will just come in right there at 40.11. I think that might be a stretch unless we'll see if they test the equities this morning, but they're trying to hold up these key levels, but we'll give it. Take a look at the bonds. Well, they've kind of eased back a bit because the whole Italian thing looks like the Italian government may be starting to relent a bit. So that's going to be resistance coming right across there, 60.89, not that far away, 60.89 there on the bonds today. There's a 60.89 support. right there, 60.53. Well, finally starting, because of that, to get a little bit of a bounce here with the DAX, a little bit of good news out of Italy, relieving some pressure. And the key resistance, because boy, we are very oversold. If you look at this DAX, we could certainly come a ways. So we wouldn't necessarily get in the way of this thing. And so the real resistance level is going to be right there, which is 11,451. And some support. I'm just going to go with the levels here because I think that they'll be okay. I'll probably try and push them a little bit higher. Support, we're going to go right there, which is 11,239. And that completes the bias chart for today. We'll see you in the chat room, and good luck trading today here with the pairs and metals. Thanks for joining us here on the European Crossover.